Angeline Ong, and welcome to your look ahead to Thursday, the 14th of December. Now, central banks will still be in focus, especially after the Fed. At this point in time, we haven't had the Fed rate decision yet, but earlier on Thursday, we'll get the Australia unemployment rate figures, expectations for November. 3.8%. This is after 3.7% reading the previous month. Just checking in on the Aussie dollar versus the US dollar here on the platform. Now, this cross, as you can see here, has been in an upward trend movement since December 2023 on a minute chart. But let me just show you the daily chart. As you can see here, quite a different picture. We have seen this in a sort of upward channel since the 25th of October. The Australian dollar flat around 65.61, though, having traded in a range of 65.40 and 66.12 overnight. Now, the Australian government, if you remember, on Wednesday said that it is forecasting a budget deficit of around 1.1 billion Aussie dollars. That's around $721 million in the year to the end of June 2024. That followed the first surplus in 15 years in 2023. And the key thing to remember, of course, is every cross, there are two stories, because it also depends largely on what the US dollar does. And that will then depend on what Jerome Powell says about the infamous dot plots a little later on in the session. Now, the Fed is then followed by the Bank of England out with an interest rate decision. Now, the Bank of England is expected largely to keep its policy rate unchanged at 5.25%. The other thing is there will not be a monetary policy report attached to the decision. Now, this would make it, if we had an unchanged decision on rates, it would be the third meeting in a row that the bank has held rates steady. But do keep in mind that inflation is still relatively high in the UK, and therefore, in terms of the policy of the Bank of England, it's unlikely to cut rates anytime soon if you compare it to the ECB and the Fed. The European Central Bank, speaking of they are also out with a decision. Main refinancing rate is forecast to remain at 4.5%. Now, the facility rate is expected to stay at 4% and marginal lending rate to remain at 4.75%. Just checking in on the euro versus the dollar, because this is also a cross that's been range bound of late, trading between 10,806 and around the 11,000 mark. What I can tell you is that many in the market are looking perhaps for the ECB to surprise and potentially cut rates ahead of the Fed. Now, if it does so, then we could see the euro weakening against the dollar. Now, in terms of the US, we've got retail sales figures, which will be pounced on by many investors to see how the last retail sales season has panned out. Of course, we have had Thanksgiving recently, along with Cyber Monday and also Black Friday. And early indications show that people are still buying, but they're becoming more cost conscious. And retailers with the buy now, pay later services tend to be doing better. We've also got initial jobless claims and business inventories to boot. In terms of earnings, we've got Currys out with first half numbers out of the UK. And from the US, look out for Costco wholesale. Now, Costco is that outfit, big warehouses, many people driving there with their big SUVs and also pickup trucks to try and grab a bargain. But Costco, like many of the other retailers and grocers across the US, they've seen a shift in buying behavior. And whilst, as I mentioned earlier, people are spending, they are becoming a bit more cost conscious about where they spend their dollars. And that's it for now. For more market moving news, be back on Beat the Street at 13:30 London time to give you a heads up to the US trading day. And IG's Jeremy Naylor will be on at 7:30 on early morning call ahead of the European market open. Follow me on Twitter at Angeline Ong. This is IGTV.